Good afternoon. Really appreciate everybody joining us here for this fireside chat, and really looking forward to this conversation because there's lots to talk about, and it's dangerous to be repetitive, but I think some things need to be hammered home, and that is really understanding where gold is going and where it has come from and what is happening here in general. So it can't be repeated enough. That we all understand where we're at in this cycle. So we've got some fantastic keynotes panelists here with us on stage. Christopher Aaron, he's the founder of iGold Advisor, a bit of a cycle analyst, so really looking forward to hearing from him. Where in the cycle are we and how much gas is left in the tank? And then with Adrian, of course, we're going to talk macro as well and really talk a bit about portfolio construction and things as well. How is he spending his money right now? How is he investing? Is he happy with where we're at right now? Are you taking gains off the table? We'll explore together. So looking forward to that. But maybe we'll set the scene a little bit, Adrian, with you first. Gold is broken out, $5,100. Maybe mention three of the key drivers that you're seeing that have pushed gold to this limit right now. What is it?
Yeah, okay. So to me, one of the most important things about where we are right now is that virtually all of the drivers that have pushed gold up over the last 3 years are still intact. Most importantly, of course, as everybody knows, is the central banks. Central banks concerned about concentration in a single asset, which is the currency of a profligate government which wants to weaponize its dominance. And I'll remind everybody that this didn't start with the current US administration, whose name shall not be mentioned. This has been going on a long time. In the year 2000, central banks had something like over 75% of their foreign reserves in the US dollar. 5 years ago, it was down to 65%. And that's before anyone had heard of Trump in a political sense. Last year was 2024, it was 57.5%. In August, it was 48.5%. So this is a trend that's been going on for a long time. And I would ask you, if you're a central bank and you've got half your assets in a currency of a profligate government that seems to be taking no steps to control their spending and their debt, and they're weaponizing that against friend and foe, is 48% too much? So I would say that trend is going to continue. People concerned about deficits around the world and so on, but so all of the drivers for the last 3 years remain in place. Now we have a new driver, and that's Tether. Tether, the US stablecoin company, started a gold-backed stablecoin, and Juan Santuri, the chief of global projects for Tether, who's driving this gold business, he said his biggest concern is not being able to find a reliable source of gold to back the stablecoin. Tether, for the last two reported quarters, not the fourth quarter hasn't been reported yet, but for the second quarter, the third quarter, Tether bought more gold than any central bank in the world. Not a lot of people know that. And if their goals and ambitions and targets for the gold stablecoin are only half or a third what he thinks they will be, that they're going to continue buying gold. So I don't know if, so basically I think the drivers of gold remain in place. There's nothing suggesting it's going to change. That doesn't mean we won't have a pullback, but there's nothing suggesting that the next 1, 2, 3 years will be any different.
Fantastic. No, Adrian, thanks for that. Christopher, you study cycles, you study history, over 100 years of gold moves in history. What does this remind you of that we're in right now? Do you see any parallels, or is this actually something different?
Yeah, well, I agree with Adrian, but for different reasons. I'm primarily a chart or a price analyst. Those are the things, what he has described are the things that are causing the charts or the price to move in the directions that I spend my time studying. But I focus in on the price as sort of the ultimate decision point for the sum of the markets. And what I can say right now is when I study this cycle compared to going back 130 years, 130 years of history, the relationship between the US stock market and the price of gold. We have just seen a signal today, or I should say this month, that we last saw in 2002 as to when the gold price was going to start outperforming the stock market. So the crazy thing to grasp is that even though the gold price has risen by 5-fold over the course of the last 10 years, and we're talking about $5,000 gold has just started to outperform the US stock market. If this ratio, the relationship between gold and the US stock market, just gets back to where it was in 2011, and remember, in 2011, gold was only $1,900. But if the relationship between the stock market and gold gets back to where it was in 2011, we will be talking about $9,000 gold within the next 12 to 24 months. So that's a historical data point that happened back in 2011, just 15 years ago, and I think that's the next logical stop for gold.
Perfect. Yeah, I like the back and forth there. Let's go back to the drivers again. Let's go back to Adrian. What is gold telling you right now? Gold is up, silver's up, the platinum, like the PGMs are up, but the US dollar, stable, bond yields, somewhat stable, S&P 500 still near record level. So my point is it's fairly flat while the precious metals are breaking out. What is that telling you?
Well, I think it's telling you that there is a lack of trust in the world's reserve currency, which is the dollar at the moment. So it's a lack of trust in the dollar as an asset that can preserve purchasing power. We can say that the dollar is, what was your expression, somewhat up, but somewhat up against every other fiat currency in the world. If you look at the US dollar since the Federal Reserve came in and US was off the gold standard, the dollar has lost 99% of its purchasing power. That's fact. That's not some conservative conspiracy or anything else. Since 1971, we're down about 80% of purchasing power. So people are losing faith, losing trust in the dollar as something that can hold its value.
Well, we've known about that since 1971. Why is it taking over 55 years to get to that point where people are starting to realize, we might be in deep doo-doo here?
Well, people are complacent. And there is that wonderful saying from Adam Smith, there's an awful lot of ruin in the nation. You know, we saw this with Britain, of course, and you saw it with Rome. Countries that are extremely powerful, empires that are extremely powerful, it takes a long time for the rot to really set in and for the deterioration to be obvious. I think it's now obvious. And of course, what the current president is doing is only making it more obvious. But again, I emphasize, Trump didn't start this, and it won't end when he leaves office.
Good point. No, that trend is intact, I think, for a long time. It will be. So, Christopher, coming back to you as well, if you have anything to add to that, but where do you see this going? Is this just a blow-off rally, or is that, like you hinted at, is that something more that we can expect here?
And if I could hint on the dollar, we mentioned how, all fiat currencies are losing value, and that is true over time. That said, if we look at the chart of the US dollar index, which is the dollar versus a basket of foreign currencies, the euro, the Japanese yen, the Canadian dollar, the Swiss franc, etc. That has actually been in a rising trend. The dollar has been in a rising trend versus most foreign currencies since 2008. So we're going on almost 20 years. Now, I am a cycles analyst and a trend analyst, and I look at a lot of forward-looking indicators. And it is the US dollar is right now right on the line. It's right on the rising support line going back for almost 20 years. My take on what we are seeing fundamentally, what we're seeing as far as the gold price and the silver price, is that these metals are predicting that the dollar itself, the dollar index, is about to break down from that nearly 20-year rising trend. But when that happens, I believe that is what's, because we talked about all fiat currencies can be losing value versus real assets. Yes, that's true. But there is something special that happens when the dollar, the world's reserve currency, starts declining even versus other fiat currencies. And you have major reserve holders around the world that start to say, we actually need to to divest out of dollars. I think that is coming.
Like gold is already at $5,100. So if that happens at that point, like maybe just to reiterate your price target that you might have mentioned, is that the catalyst that really shoots gold to the moon here?
9,000 is my 12 to 24 month target, and that is based simply on the level that gold hit in 2011, based on the relationship between gold and the U.S. stock market. $9,000.
Yeah.
And to be fair, that was a point when gold was at a high. You didn't pick an artificially low price for gold as your starting point.
Yeah. Absolutely. Christopher, just to follow up, like what's your target for the Dixie then, for the US dollar? Do you have a target in mind there as well that corresponds with your gold price target?
When a 20-year rising trend for the DXY or the dollar index, when a massive sort of secular movement higher like that breaks, dollar index is currently around 100, 101, I believe, my last read on it. When a rising trend like that finally breaks, you will tend to see an impulsive initial move lower. So I could see the dollar falling from 100 down to 90 or so. And then what will probably happen is you'll get a recovery, you'll get a sort of false recovery to retest the broken trend. And then I'm looking forward in the next 1 to 2 decades, and I think that the DXY is going back to its all-time lows, which were hit in 2008 during the global financial crisis. That's around 70, 72 on the index.
Okay, that's a long way to go. Yeah. So, interesting. Adrian, like what could derail this train? Like we're always super happy, excited, but we got to be careful to the downside risk as well. We got to be aware of those. Is there anything you're worried about that could derail this?
You know, I say privately, but now I guess my girlfriend says don't say this, but what makes me nervous is that I can't think of something reasonable that is going to derail this. And by derail this, we mean gold dropping 30, 40, 50% and staying down. We don't mean a 10 or 20% correction for 2 months.
Exactly.
Or being flat for 5 months. I honestly, I mean, we can be facetious and say, well, if the US has a budget surplus and if Trump starts to act nice with everyone around the world, and if this and if that, these are things that aren't going to happen. So what is the reasonable, a possible scenario? I just don't know, Kai. I really don't know. It makes me nervous because we should be, you know, one of the things I always try to do in markets is I always read the person that has an opposite view from mine. I read it, I try to understand it, and I try to say, why is this person wrong? I can't think of a reason, Kai.
Absolutely. World peace, you know, why not?
Exactly. Peace breaks out around the world. As I say, the budget deficit goes away, you know.
Yeah, maybe one of those
nice.
beauty pageant winners will actually take power, and then we got world peace. So we should be all right. Christopher, coming back to what you've learned over history, like you've studied cycles over hundreds of years. Was there anything that could have derailed, or have you seen anything that could have stopped this move? Or is there anything that could stop it?
The question that I have is, could the advent of artificial intelligence, nanotechnology, and let's say space exploration, could that cause a level of growth, if one was to trust Elon Musk, could that cause a level of growth that allows us to grow out of the debt problems sooner rather than later, and therefore the debt to GDP levels actually compress? And something like that were to derail the gold and the hard assets trade. The message of the charts, though, when I look at this from a data perspective, it looks to me like that thesis of us growing our way out of this is more like a topic for the 2030s. And I think the debt and the problems with fiat currency is more like now and for the next 5 to 8 years.
So did the invention of the steam engine derail the gold price trajectory back in, what was that, 1890 or whenever it was invented?
Well, no.
Earlier, right?
You had railroads in the 1830s.
Oh, I'm sorry. It's like, but did that derail the gold price engine? I'm just trying to get some historical context around it, of course.
Britain was on the gold standard at that time, and the century from 1815, after we whipped the French, until 1914, just before we whipped the Germans, sorry about that, that century we were on the gold standard, was actually a period of deflation. Yeah. The pound was worth more at the end of that century than at the beginning of the century, and yet the standard of living of people in Britain, from top to bottom, was dramatically higher at the end of the century. So no, I mean, but you can't really talk about it derailing the gold because we were on a gold standard.
No, I'm just trying to find something that we can hang our head on, try to understand, okay, what could cause, wreckage. Right?
And of course, the deflation that you talked about with respect to the pound happened because the pound was backed by precious metals on some level. So really what we're saying is that precious metals gained value relative to all other goods and services. Money became more valuable, in other words.
Of course, and it was, quote, a good deflation, to go on a tangent, you know this. But, one of my pet peeves is when people use words like deflation, everybody assumes is a bad thing. Mild deflations on a consistent basis are actually very positive. We only think deflation is bad because the last deflation in the US and in the world was the 1930s, which was a recessionary deflation. So we think deflation is bad, but so when I talk about the 100 years in the 19th century, that was a positive deflation.
Isn't that baked into our system anyway? Like the capitalistic society, deflation is actually good?
Of course.
Right? So
if you look at markets that the powers that be, the central bankers do not meddle with, you look at flat screen TVs or air travel or anything that iPhones, you look at the incredible declines in the prices of these things. I mean, a flat screen TV 20 years ago was $10,000 and now it's $500 for the same thing, so it's fallen by 95%. Do you see the Federal Reserve coming out and saying, we need to bail out, Samsung and Sony, because the prices of TVs? No, I mean, that's a good thing. We want deflation over the long run. It's just in this fiat system, they've convinced everyone that prices going lower is a bad thing.
Absolutely. Gentlemen, I want to leave the audience with a bit of actionable advice as well. Adrian, you're a portfolio manager, fund manager as well. You got 200 companies here. Is there any value left after the massive run here?
Oh, absolutely. I mean, I think there's value at the high end that isn't represented. Well, Wheaton's here, I see one or two. Yeah. Fortuna's here. But there's value at the high end because as the price of gold has gone up, and as the price of gold has gone up, at the same time that the costs have stayed reasonably stable, despite the price increases we've seen in the stocks, and I'm including the big ones, Agnico and Franco and Wheaton. Despite the price increases we've seen in the price of the stocks, the value of those stocks has actually got better. I would argue that Agnico on Friday is better value today than it was 2 years ago, despite the price having gone up. Because when you get the price of gold move up, you get cash flow increase on a leveraged basis, right? Your cash flow doesn't increase by 100% if the gold price moves up 100%. It moves at much more than 100%. The value of your reserves doesn't increase at 100% if the gold price goes up. It increases at much more than 100% because at the higher price, you can bring more resources into reserves. So you have more reserves and the value of reserves is more. So it's like Oscar Wilde said, people who know the price of everything and the value of nothing. So don't look at price, look at the value. There's lots of value all the way down the food chain, but lots out there as well. Yeah.
Christopher, if somebody's still underweight bullion or precious metals in general, what's your advice right now?
I mean, look, I bought some bullion like a month ago at $4,300, and I was like, let this be the top. Let me be the top signaler here by buying. I mean, I'm already up $800 per ounce on that in like a month. I mean, that's crazy. But I mean, physical gold has a very bright future in front of it still. We talked about that from the price targets. But I do have to say, there's a particular quirk in this sector that is still present today, which is that if you just go back 2.5 years ago, when gold was still in that consolidation between 1,700 and 2,000, plus or minus, what happens is when the price of gold goes sideways for a number of years like that, gold mining stock investors get disinterested. And they sell, even if the fundamentals are improving, they end up selling their shares. And so all the way down the totem pole on the development side of the spectrum, the small cap development stage gold miners, a lot of these companies in early 2023, before gold broke above 2,000, a lot of these companies were on the verge of bankruptcy. I'm talking they could not raise money. With gold at about $2,000, these companies couldn't raise $1 million to keep their operations going. And it's only been 2 years since gold has broken above 2,000. I mean, we're talking 5,000 gold, but in time, it's only been 2 years. So all I'm going to say is there are a number of companies that were on the verge of bankruptcy that have just rounded up from those lows, even though the leading signal, bullion, is at all-time highs. Just to give a couple names, I talked about it at my keynote. Provenance Gold is my single biggest position. It's a 2 million ounce historical deposit in Eastern Oregon that they've found visible gold 3 times below the historical asset. That's my biggest position. There are dozens of companies like that were super stressed just 2 years ago that are still not properly valued, and I think that is a major opportunity.
Fantastic. Gentlemen, we're out of time. Really appreciate your time. Adrian Day, Christopher Aaron, give it up for them. Thank you so much.